Welcome to TradeTheNBI.com. This is John. This reports for the 30th of June as we prepare to start the new month here at the beginning of the week. Always an interesting one because, there's a lot of big rulings that took place over from Friday. Uh, Trump winning on the national injunctions. Again, that's going to help the cases still go forward. It's just you can't stop everything from taking place. That's going to have an effect going forward. But here you are already, 6 months into his term, and uh, now you're finally going to get some of the things that they've already, worked on. Um, Begin to take place. And that delay is exactly what we've been talking about and has been sort of a thorn in the side, and it's really delayed almost everything he's been working on. That said, I guess, those cases are still going to go forward, but now you're not looking at having any of the impacts and stuff until much later. The big, beautiful bill also finally passed from the Senate side with whatever adjustments. We don't know what final form that's going to take. Probably be the last piece of legislation that goes through, because with the Fed keeping things where they are, you've got enough delay that a recession is kind of baked into the situation, or at least some form of uh, significant slowdown that has already begun. And it's a double-edged sword because you have to look at it from the standpoint you've reduce some federal spending, at least in this case, waste. You've seen the unemployment numbers in the mid-Atlantic area that are reflective of all the different government positions that aren't being filled in. You have a reduction in subsidies that are going to migrants coming across. They've stopped coming across, so now you have a reduction in the amount of demand on housing, everything else. That also has a deflationary effect. So those are end up being net positives overall from an economy standpoint, but you end up with these deflationary concerns within a high interest rate environment, which it's not a great recipe. But when we look at our readings, you can see MBI white riding here on the MBI. Also, we have magenta still clearly above yellow, but that any breakdown now here is going to put MBI white in the lead. We had a strong rejection with bulls taking charge of this for the run right here when we met with DOC Green coming over Cyan and formed a tight spider, not the kind of open loop one, but it's that rising red that's been solid. And again, we just saw from where the shakeout went from negative here to the beginning of positive. That was your turnaround move, and it continued from there. And so it's still building on that. Yeah, you hear me talking about what is slowing. Why is the market going up? Well, of course, the market's going to continue to move in its momentum direction, particularly with the idea that the Fed will be forced to cut. The question is how much, how soon, and have the metrics changed enough for that to be the case? And the more they look at it, and the more inflation doesn't happen relative to the situation that they keep thinking will happen sometime in the future. Yeah, it's a problem. And, Powell's just buying out his time. He's just going to make it as difficult as he can for Trump going into the end of things. And, some of the reads that they've had for where things should be are just bizarre in that sense. It is more interesting from an NQ standpoint that you have cyan under red. So that had converted always into the always a buy category. But nearing positive extremes. So keep an eye out for that one because the potential for your retest is to go back to, it would be this bar right here. So that ends up being your low side of it. Do I expect things to continue in a positive note? Yeah, for a short period of time. But as soon as any conflicting data starts to come through, or you end up with these situations where now it looks like you've got Canada who it's pretty much going to behave just like the EU, not cooperative whatsoever when it comes to the trade deals, thinking that they can just bide their time with Trump, push him off. Sort of like what the Iranians did, think that, oh, yeah, we'll just play the politics of, delay, delay, delay. But, yeah, Trump's not going for it. So is he going to quadruple 100% tariffs for Canadian goods? We don't know. Of course, the Fed will think that's inflationary, but what do you need from Canada? No, exactly. So it just hurts them more than anything. It's the same thing with most European products. What do you really need? Well, okay, if you want it, fine, you're going to pay for it. So it's not inflationary. It's just a choice. So this is where they misunderstand. It's basic economics. Treasuries, though, going to continue to fade in the yield, and that just puts more pressure on entering the market, because if you can't get yield from interest rates, then where are you going to go? And it's bizarre because you have plenty of room to cut rates. Why wouldn't you want to save the federal government a huge amount of money in interest charges? So a lot of those things just don't add up. From the oil standpoint, though, again, as long as we continue to see draws to inventories, it's a problem. Until you see, once you get your first surplus, that's when oil really starts to take a dump in price wise, and it really needs to be seen that way. And at this particular stage, there's still enough activity, and things are right on that razor's edge. It's possible we avoid, melting down. But again, like I said, when you get into this deflationary state of housing prices, not enough demand, that's going to have to cause a recalibration. So a lot of these people who bought at the higher end of things going to be underwater. Will they stay with those mortgages? Some of them, though, have really advantageous interest rates. So yeah, it gets complicated. Only until rates decline would any housing affordability increase, which would improve the situation. But the Fed doesn't look cooperative in that standpoint. So the euro, everyone's been buying the euro. Again, makes no sense, because when you compare the yield situation in America versus euro, but again, they're afraid of Trump, and so it's a fear trade. Fine. They're going to get hammered at the end of it, because the dollar's going to come back strong. It's in its typical weak period, and then it starts to make a move to the upside as long as it stays and somewhere under that 118 range to the euro. Then it'll be fine, and it should start to build from there. And then how ugly it gets for the euro will really depend on how bad things get in the eurozone. Gold, we expected the weakness from peace coming forward and things being soft, as long as that premium risk stays minimized. I think it's just likely to trade. It's still going to be elevated, but it's not going to have quite the hyper movement. And so I think you can look at Bitcoin and them. It's still going to trade relatively close to the Nasdaq, though you can see a strong NBI white spike, and you're near the 25. So if the magenta dips below that 25, that's problematic for Bitcoin. You would look for it to move back towards the 50% range. So yeah, that's an interesting development there. Not quite showing the same strength that you're seeing relative to the Nasdaq, but then again, it also moved a little bit further. So, and ETH obviously much more subdued, so doesn't have anywhere near the similar reading. And again, that's just part of where Bitcoin has become more desired from the 50K standpoint. So we had that first run. It was a nice move. Then we ended up with the rebuy that took place right there around 161, and then got out at 62 for modest 50 plus points. It wasn't quite at the peak, but it was enough for just a retrace to trigger that, just in case, because you ended up with the NBI white leading in that, but then magenta took back over, which reinitiated it. And you've been seeing the short cover drive here with magenta over yellow, this classic one with the NBI white rising. And again, you have the conversion here, where even though that NBI white was rising, it was doing so with cyan under red right at the flip of it, and boom, there you have it. So that's all pretty clean. Of course, indicators for July will go out. We're going to have a short period with the 4th holiday. That's going to create a lot of wackiness, but after that, then we're going to start getting into some difficult decision making, I think, for some of the rest of the summer period, because it's going to be a bit tumultuous as to how the readings come out from an economic standpoint. And I think there's a bit more pain to be realized relative to where we're at this particular stage. And I think that we'll start to explore some of those details further, because I don't think a lot of people have really talked about the potentials of what it means when you start to get into a deflationary environment. And the Fed already being behind the curve, it's going to be too late for them anyway. So how much pressure that puts at the beginning of the year is going to be the interesting one. And of course, Democrats are going to be happy with that, because they're going to be looking at midterms and wanting to see that situation develop in their favor. Here you can see the European session at this particular point still elevated and probably should remain relatively close to that for the open for the US. As always, the anything relevant, I will put it on the team chat, and you can look for indicator renewals so that you'll be all set for tomorrow. Trade well. Have a good one.